Hey traders, Nick here doing some homework after hours. We had a pretty exciting day in the live room. It was buzzing. I think the high of the day we had 310 people. So we had a lot of witnesses for what about to tell you. We had kind of an eventful day, and we're looking at the S&P 1 minute chart. We usually go down sub 1 minute if we're trading fast, but this 1 minute chart will give us the point of this video, which is this. The point of the video is to tell you it's not about the headlines. It's about knowing the charts and where is support and where is resistance and where is likely the turnaround spots are. Okay, so that's the point of this video. So pay attention for 5 minutes, you'll get it. It'll become clear as proof, but you will have to practice it. And that's what we do all day. Although I don't like to trade fast, the room does, and we find entry opportunities. I like to do this stuff. I lay out the morning notes. I lay out my plan of action, 1, 2, 3, for short-term, long-term, and some other notes about other things. But during the day, plenty of opportunities for the right people. So let's walk you through the opportunities today. First of all, it felt like it's a mess, right? But not really. We had a range, and we stayed within the range almost all day. What about this, Nick? Let me get there. But first, if you don't subscribe to this channel, do so. And if you do subscribe, make sure the bell is put on, because we do go live every once in a while. Like this Wednesday, we're going to go live and do some charting like this before the market opens. This way, you'll hit the ground running for the day. Anybody can come. You don't have to be a member. You'll be live on YouTube, and I'll hit stream. And if you have the bell, your alert will come on that we're going live. You can join us. But if you want to join us on Wednesday, look out. Maybe I'll post it on Twitter or something. Before the market opens, about an hour before the market opens Wednesday. Hopefully you can make it. We usually have, I don't know, 120 people make it there. Some members, some not. Okay, so the point of the video again is to highlight the necessity to know levels where I shouldn't do anything and levels that could be turnaround spots. And it's not all in the charts. We have, I'll tell you why. The options chain has information like you wouldn't believe. Even if you don't want to trade the options, like if you trade the futures, we have a lot of futures traders in the room, and they use the information we post, and I have a lot of the information that I post that is derived from the options chain. And let me tell you in which way. First of all, when the market opens, you can open a statistical trade that's based on odds of success. And it's an iron condor, and is usually the highest, I guess you can call it implied volatility for today, because there's the most amount of minutes. You take the trade, and time becomes your friend, and it's a bias. It's a self-hedged trade. So as long as you nail the range for the day, you win. And we recently nailed the close within $5 consistently, maybe 10. And if you can do that in options, you win. Like through range-bound trades, selling strangles, straddles, iron butterflies, iron condors, anything that ranges the day. So the first piece of information is from the options, they kind of tell us where they want to stay, plus or minus. So today, my call of the SPX close was within like $3 or $4, which is very accurate. If you do an iron butterfly, that's like $1,000 a contract in winnings if you want to carry it through the end, although that's not my goal. So let's talk what other kind of information is in the options chain. Late in the day, I'll jump to late in the day. We were trying to break out. So I said, if it does happen, book your profits early. So we were ready. We knew where they could break out, and they did right here. But we knew that they couldn't last there too long, because the options told us there was going to be downside pressure before the close. So they would want to push them down to the range that I had set from the beginning. And they did. So they did pop up, but they didn't go and stay. They came back down. So when they fell, before they fell, I said, we've gone too far. We shouldn't go any further. We're looking for a dip. In fact, the dip we started looking was from here, and I put that entry, and I said the stop out point was here, so I was a few pennies short on the stop out, but no one was fast enough to stop out here. And if they did, I mean, they did the right thing, and they missed out on this. But the point is, not that this trade was successful, that if you believe that it's the headline that brought this upon, so if the headline was brought this upon the action, how come we had an arrow pointing down within minutes of it breaking out? I assure you, I don't have an in with the politicians, whoever said what. I really don't know who said what. So I'm pretty sure you can go find a headline and you can slap it on. Oh, that's what it did. It didn't. The headline just expedited what was going to happen. They made it bigger and they overshot. And I'll prove it to you, because when we fell down to here, I said I would go long because now there's upside pressure towards 412. Boing, right into 412. And not only 412, they took it all the way back up and finished this job, and then they respected the downside pressure once they were up there. So we couldn't have played it any better from the sense of anticipating the turnaround spots, the upside pressure, the downside pressure. The pressure is from the options chain. The levels is from the chart. You look left, you see support and resistance. The entries or exits are from proper ways to trade. If you find a turnaround spot and you want to go long, and that was a long spot, you say, okay, how much damage am I willing to take? And I didn't pick this randomly. I look left and I put it in a spot where it actually makes sense. So I want to be lower than the last bounce just a little bit so I don't get stop hunted out of it. So the point of this video is identify levels that mean something. Educate yourself on the options chain or join a group that knows it. But really the point is, and I cannot convince people fast enough that it's not about the headline. But Nick, look at all these ticks that happened from the headline. Yes, they did. The headline exaggerated what was about to happen because we knew it. We had an arrow pointing that way. Except when it happened, they triggered it and it was so violent and emotional, they overdid it and they did it too fast and too much. That's it. They didn't create a new path. The path was set. And if you look at a Traditix GEX or whatever they call that, the zero DTE GEX, it too was also saying the same thing. So if you look in the right spots, you can kind of anticipate what they're going to do when. And the headline is just an excuse. It is not most headlines don't change the price path. They just expedite what was about to happen, and maybe they exaggerate it a little bit. In any case, join us and you'll find that out firsthand. Don't forget, Wednesday morning we're going to go live before the market opens, so subscribe to the channel and hit the bell.